Today feels like deja vu because we're going over a very similar story with a completely different company. Today we're talking about Salesforce. Salesforce announced back in November of 2022 that they would cut hundreds of employees, and now they're cutting off 10% of their entire workforce. What is that in terms of actual nominal numbers? Well, that's about 7,500 employees past their already hundreds of employee layoff, bringing the total layoff somewhere around the $8,000 mark or so. Now, this is really interesting because not only is the company cutting off its employees by 10%, but it's also projecting possible future layoffs moving into 2023 and maybe even beyond into 2024. We're going to talk in this video what this means for Salesforce, how this will affect its cash flows, how it will affect its profitability, and its future outlook moving forward. If you didn't know already, if you go over here to my holdings tab, you can see that Salesforce is the largest position of my portfolio, currently sitting at about 29% in my entire growth portfolio, which my portfolio balance right now currently sits at around $40,000, $41,366 to be exact. So obviously, what happens with Salesforce is a huge determinant of how successful my portfolio is and determines a big part as to whether or not I meet my retirement goal of $1 million by the age of 40. But it's going to be a fun one. Let's go ahead and get started by looking at Salesforce and its top line revenue. But before we get into all that, we have to talk about today's sponsor, MooMoo. MooMoo is a new up-and-coming brokerage that is taking the world by storm. Commission-free trading, level 2 data, advanced technical indicators, earnings calendars to see the date of financial statement releases, and institutional tracking to follow Warren Buffett's portfolio are just a few examples of what MooMoo has to offer. With this being my first sponsor in the channel, I have fully vetted their company and stand behind their vision. MooMoo currently trades on the NASDAQ under ticker symbol FUTU for FUTU and is SIPC insured. If you sign up below using my special referral link, you can get anywhere from 1, 10, or even as high as 20 stocks for signing up when you use my special referral link down below in the description or in the pinned comment down below. Free stock amounts can be as high as $1,000, so sign up now using the link in the description or pinned comment down below. You would help support me and my channel by doing so and give yourself an edge in the world of investing. Thank you so much, MooMoo, for sponsoring this video. Now back to the content. Okay, welcome back, and let's go ahead and start by looking at this most recent revenue, 14% growth in the most recent quarter at $7.84 billion. Now, 14% growth is decent. However, when we take a look at my spreadsheet for Salesforce, you can see that the growth has started to slow in most recent quarters. Now, if you look at the revenue growth right here, 14% is good, but in the most recent quarters, you've seen 22% growth, 24% growth, 26%, 27% growth. Generally speaking, this company's been growing at around the mid to high 20 range, and 14% growth is still nice, but it's much lower than mid-20s growth. That is about a 10% roughly difference just over the last year or so in all their categories, whether it's marketing and commerce, service growth, sales growth, platform other, service other, data growth. Across the board, they've all slowed down, and they're still growing, but not nearly as much as they'd like. Furthermore, I think the profitability is what's really going to benefit from these layoffs. Now, profitability is increasing, but we really want to see margins improve over time as this company gets larger and larger and the economies of scale really start to take place in this company. Furthermore, another thing that the company has talked about is its shares outstanding. This company has been diluting shareholders pretty much since its existence. Actually, not pretty much, actually since the company's been alive. You just look back to its initial public offering, back when this company started tracking this on this data, it was right around 400 million or so, and since 2004 with its 400 million shares outstanding, today it sits at almost a billion, which is about 2.5x where it was back in 2004, and it's been on a steady uptrend consistently quarter over quarter, year over year. Now, if you see this initial announcement back in November, just about 2 months ago, they're announcing a couple hundred employees being laid off. A couple months later, back in January 4th, just a week or so ago, this company announced it would lay off 10% of its workforce, about 7,500 employees, and now they're hinting at future layoffs. Now, the bad part about this is that this will likely lead even further into slower revenue growth, that this company will continue to produce around 10 to 15% revenue growth, and the 20% levels are likely far behind us. However, this could likely benefit profitability in a massive way, and considering that the company is projecting around $6.4 billion billion in free cash flow this year. That's a big leg up from last year's 5.28. So this is what's really interesting, and this is the big turning point for Salesforce, because when you look at this company's share price, let's look at the 1 year, down 37%, the 2 year, down 32%, and even over the last 5 years, it's barely went up at all, only up 35%, and on a 10-year chart, you can see how much this company has really went down since its peak in 2021, just about 14 months ago. Now, if you look at this peak at 308, it's a pretty decent share price appreciation, but when you consider that we've went all the way down to today's share price at around 140, that is a big downturn at over 50% losses from its peak, and this is not because of the company's lack of growth, and this is not because of the company's lack of profitability growth, because the company is projecting new all-time high record for revenue and profitability. It's mostly coming due to valuation depreciation. This PE multiple, the multiple going down from originally a 40, a 30, a 25 PE ratio, currently sitting at a forward PE of around 23. So this company is doing everything it's supposed to be doing. It's still growing revenue, it's still growing profitability. They're trying to get a hold on the shares outstanding, trying to reduce their shares by buying back stock for the first time ever, and they're laying off a bunch of its unprofitable sectors. It's laying off a bunch of its employees that are frankly dead weight and are likely unprofitable to the business. And in my opinion, I think this is overall a positive move and a good reason to own Salesforce. The reason they have this cash pile continually growing larger and larger is because this company is getting more and more profitable by the day. Laying off these employees is another step in that direction, and I think it will further supplement where the company is going already. Thank you guys so much for watching. I appreciate you watching all the way to the end. Get signed up for MooMoo if you haven't already for 20 free stocks, and I'll catch you all next time.